Joining us now is Jerry Storch, the CEO of Storch Advisors, former CEO of Toys R Us, who is out doing channel checks right now on the road, looking at the state of retail.
Oh, I didn't know we were getting
driven,
video
it looks
as well.
like, I hope.
Excellent.
Jerry, where are you and what are you seeing?
Well, I'm in Chicago right now, but in the last few days, I've been on the road from Florida up the entire eastern seaboard and then from New Jersey, now across to here in Chicago. And what I saw, particularly in the South, were very crowded malls, outlet malls, stores, restaurants, kind of the opposite of social distancing. So I'm kind of not surprised that we're seeing something of a spike in cases in those areas. It's much different as you get into the areas that have only reopened more recently, like New Jersey, than across to here. So, but I will say, most of these stores have reopened vastly in excess of expectations. And so it's really off to a pretty solid start.
Well, so Jerry, as you're saying with that solid start, that there's quite a strong consumer sentiment to get out there and shop. Do you think it'll be hard to derail that sentiment with a few stories out there of cases spiking again?
I think it'll take more than that. You have a combination of sort of pent-up demand from store-crazy shoppers, all this enormous fiscal stimulus, and honestly, the fact you had a very healthy consumer at the start of all this. So it's going to take more than a few cases right now to lock down the country. I think we're going to have to find a way to operate through this, both as retailers, as consumers, as governments, find a way not to go back into kind of lockdown where before. I don't think you can put that genie back in the box anymore.
So, Jerry, a lot of these stores that have to open are doing so with limited capacity as they're trying to follow the rules of the various phases of the states they're in. Can retailers make money at 50 or 30% capacity, even if they're full at that point?
It really depends on the retailers, who you're talking about. A lot of retailers are doing great, thank you. The Walmart, Target of the world, Costco, Amazon, of course. These companies are doing well before, and they're going to keep doing well. There are other companies now, those that are just really reopening, that have big problems, they have big issues. They did before this started, though, and just reopening is not going to be a cure for their strategic problems. And when they open, though, even if they're 30%, for example, below last year, and actually most of them are doing better than that right now, but if they were 30% below, which is what we saw in China, what they did last year, it's still a whole lot better in the margin than not opening at all. The real problem is that many of these companies are highly leveraged. And the first thing they did when the pandemic hit was, of course, they drew down their line of credit. They wanted to make sure they had cash to get through this. But eventually, all those bills are going to come due. So it's better to be open to cover your marginal expenses, but those fixed expenses are huge. And for companies that are highly leveraged with core strategic problems, there are going to be big issues, lots of bankruptcies, lots of store closings, not just this fall, but especially after holiday. Those that don't do very well, I think there going to be a massive shakeout in the industry, much more consolidation of market power in the hands of those that are successful. And of course, Amazon.
Jerry, are we past the peak of bankruptcies, or could there be a few more quite high-profile ones that we haven't thought about yet?
We are nowhere near the peak of bankruptcies. The U.S. probably has 2 to 3 times the retail square footage per capita that we actually need. So a lot more is still going. There are many, many more shoes to fall, particularly among department stores and apparel stores, especially mall-based apparel stores. This pandemic was the last thing they needed. They were already in trouble. They were trying to find a way out of it. A lot of them turned to sort of experiential retailing, but consumers don't want that right now. They want in and out. They're destination shoppers. One thing I've heard is even when traffic is down, the average ticket is way up because consumers are going in. They know what they want, but they don't want to loiter. They don't want to hang around and kind of, impulse shop, which is the way all these retailers were going before. So their prior strategy will not work in the future, and they're in big trouble.
What should the balance be for a retailer of how much business is online and how much business is in stores? And how far are most retailers from achieving that?
Well, I think to be successful in the future, you're going to have at least half your business come from either online or where you buy online and pick it up in the store, which is kind of a hybrid type of a model. And most apparel-based retailers, most department stores are far from that. They're in kind of the 20% range. The good ones in the 30% range. So they are a long way from where they have to be. Now you see some of the furniture players, some of the home goods stores, that are much closer to those numbers that are doing far better. And you see people even like Walmart with that huge business they've developed where you buy it online, you pick it up in the store, doing very well. And of course, grocery delivery is the way of the future. You've seen a huge increase in uptake there, and it's going to keep growing. So I think the people who've adapted will do well. The people that were in trouble before, they're going to do a lot worse. Reopening is not a cure for the problems they had before the pandemic even hit.
Jerry Storch, thanks for joining us out on the road. Thanks to your wife as well for the steady driving throughout. We appreciate the insight.
Thanks.